Hello, everyone. Today is Friday, January 8th, 2021. My name is Evan. Welcome back to our weekly stock market analysis video. If this is your first time catching one of these videos, welcome. Welcome to our channel. Welcome to this video series. We break our analysis up into two parts. In part one, we're going to review everything that went on in markets. And it was a busy week for markets kicking off the new year. We're going to look at performance, sectors, internals, volatility. We actually have a new segment coming, or a new piece of information we're going to add to the routine hopefully in next week's video. I'm super excited for it, but it's correlations, and it's correlations that we can track on an ongoing basis here and kind of see and sniff out what's moving together and how markets are sort of flowing together. I think it's going to be a good addition. I'm excited for it. Hopefully next week we'll have that in the mix here for part one. So that's part one. We're going to look at all kinds of data and basically break down what happened in markets. In part two, we jump into the charts, take a look at those longer term trends, and try and position ourselves and make sense of everything as best as possible. So hopefully that sounds good to you. Let's kick it off here with some of the takeaways. Small caps leading the charge. They finished 2020 strong. That theme is continuing. Everything worked well pretty much for the first week in terms of equities, but small cap stocks still in the front. Bonds broke down. We've been watching this consolidation. If you've been tuning in, I think every single week we've been kind of harping on that volatility contraction that was taking place in the bond market. We weren't sure which direction it would ultimately break, but we did get our answer this week. It was to the downside. We'll talk about it. Metals also sold off aggressively. That came late in the week. Friday, basically, we saw a good swift decline there for metals. We'll talk about that as well. So if we look here at the performance, final right-hand side column here is the 1 week return. You can basically see it was good. It was good week for the market here. 1 to, let's see, 2 all the way up to 5.7% here for the Russell 2000 for the week. Small international stocks also doing very well here, so up 4.37%, outperforming the majority of the U.S. averages. So small cap stocks, international stocks, that was the big story. Of course, everything else not too shabby at 1.6%. If we look at market internals, very strong week here. Lots of stocks hitting new highs, lots of stocks moving up in the right direction. Cumulative AD line 2100. Net number of 52-week highs on the week, 1,200. If we look at the longer term sort of flow here of 52-week highs minus 52-week lows, we've got this beautiful chart that just goes up and to the right. It's exactly what you want to see in your healthy, constructive, bullish markets. You want to see a wide expansion of stocks hitting new 52-week highs. That is a good sign of sort of institutional strength and capital flow, and we continue to see that really take shape, and it's been taking shape for the past 2 months or so. Really hasn't been too much of a change in this chart in this direction. If we go to sector performance this week, energy at the top of the list. 9.26%. Again, this is continuing off kind of that fourth quarter trend as well. Materials was in the second slot there, 5.69%, and consumer discretionary having a great week, up 5% as well. If we look at the downside, real estate down 2.5%, starting to show some relative weakness here. Like if we look at the 1 month column for 1 month returns, you can see real estate now is the worst performing or underperforming sector, followed by staples and utilities in the bottom three. If we go to volatility this week, not a big change, but a change in the right direction. Volatility came down 21.51 to close out the week. That's down from 22.75 is how we finished in the front month fix. This term structure basically staying the same when we look out 3, 6, and 1 year. If we go to interest rates, they were up this week. They were up pretty sharply across the board. 5, 10, and 30-year yields all moving higher here. One other interesting note from this week was investment grade bonds, so LQD. We saw a almost 2% drop here on the week, and that is notable. That's something where we want to pay attention to this, to pay attention to what the credit market's doing. This is a pretty simplistic view to sort of just look at one ETF, one asset, but it is a decent proxy. It can give us some leading information at times. So let's pay attention to the credit market here. This is a bit of a sharp move down. So let's just keep an eye on that going into next week. If we go to dollar and commodities here, the dollar actually closed higher on the week, and there was some volume coming in. We're going to talk about that a little bit later. Gold and silver, as we mentioned here, starting to break down again. Most of that selling came in on Friday, almost 3% down for gold, almost 4.5% for silver. Bitcoin basically ignoring the dollar so far, up 18% over the past 1 week, 64% over the past 1 month. 335% over the past year. That continues to rock higher. Ag ETF was down a bit. Crude oil had a good week, and so did natural gas. So when we put it all together, we get a pretty decent report card here. Give it a B in terms of its marks. We got volatility that's still, kind of in a difficult spot. We also have the credit market that we mentioned earlier that we do want to pay attention to. So we got 2 strikes there. Otherwise, market breadth good, risk sectors outperforming, equity market looking pretty strong. So B is the report card for the opening week of 2021. And if we finalize here with our trading systems, sometimes the most important thing is just ultimately, how are you positioned? And this is how we're positioned right now. We've got 2 trading systems. Merlin, which is our longer term trading systems, actually down to 75% invested. It's probably the lowest number I've seen there in the past couple of months. Lots of things are just working higher, hitting profit targets, extending for us, and we're essentially reducing exposure and taking risk off the table as this market continues to rally. Of course, Merlin's not going to shy away from this market, so it's equally going to want to put risk back on because it sees that this is a environment to ride that trend to the upside. Lamerick, on the other hand, a little more defensive down here. It's still positioned, net long for 41%, 8 positions, does have some short positions on, but overall it is positioned net long heading into the new week. So that's how we're positioned. You can learn more about these trading systems on our website. We actually just published free trials for the systems. So that is something we get requested a lot. Free trials for both of these systems. It is available. Head to the trade risk /trading systems or /free trial. I believe will get you there as well. So we'll be back in just a moment here with part 2 in just a second. All right, we're back here. We've got TC2000 open. We've got our equity market grid we are looking at. Let's break down this equity market grid. So we've got price itself as the white dashed lines on each of these charts. We have a custom smart trend filter that we've built, measures price, volume, and duration. And it helps us determine trend strength, and overall directional bias. And this is a weekly time frame that we are looking at. So when we look here at the weekly time frame, as you might expect, nothing has changed. The markets have been in this consistent uptrend now for the past many months. It hasn't changed our outlook here. We've had essentially buy signals on all of these markets. They continue to lift higher here, and so everything is still in a buy signal at this time. If we go down to a daily time frame here, looking at the daily chart of S&P, Nasdaq, Russell, and ACWX international markets, you can see the same thing by Friday. Now, we did have a little bit of weakness in here for the S&P 500. So again, notice here, we did have some yellow dots printed last week, or early this week, I should say, and those ended up resolving back to the upside, and we did get that green print here into the end of the week. Same thing for the Nasdaq. We had a little bit of turbulence here, but everything by the end of the week shaped back up. Russell 2000, same kind of picture here, much more minor pullback back to the upside, and ACWX arguably the strongest, as it's been in a buy signal here consistently throughout this week. So that is kind of the same narrative. It's the same thing we've been talking about. We've got multiple time frames that are all higher. That really hasn't changed much at all over the past few months. So let's take a look now at some of the individual price actions, see if we can look at things a little bit closer, see if we can get a bit of a different outlook here. I've got so many boards. That's right. We always look at the S&P 500. Here it is. So this is kind of the perspective we've been looking at here, and I know it's quite busy. We talked about this. We've talked about a few things. So first is this channel that you see drawn on here, and that was kind of one of the last ways we were sort of gauging the strength of this market, or just its recent movement, was kind of rallying in this up channel. And on Monday of this week, we saw a quick abrupt move to the downside. It's almost like it was going to break down from this channel here to start off the new year, but it didn't last long, or it didn't get any follow through, because we essentially saw buyers kind of step right back in through the rest of the week and carry us higher and close us at all-time highs. So we're back in this channel. We're back in this sort of, let's clean up this chart because I know it can be a little difficult to see. We're back in, this uptrend more convincingly. And if we were to throw on just kind of this band of prior highs in here and where the market has sort of pivoted, we've got this 3720 down to about 3700. This is kind of a, it's not a precise level. I never look at these levels to be completely exact, but if we started to lose this little zone in here, that's where I would, change my short-term perspective on this market. If we started to lose this area here, we'd have some technical damage. We'd start to reject, higher prices and fall back below some of this prior supply in here. So that's kind of the bigger area that I would be paying attention to. It's essentially 3,700, let's call it. Now, you could be a little more active here. You could be a little more precise. You could be looking at this 3767 all the way up to even maybe Tuesday's high or Wednesday's highs here around 3784. You could use this as a very upper level area to pay attention to. If we started to lose this zone in here, then in the very short term, you'd be losing kind of that upper level momentum. So you could kind of keep an eye on that if you want to keep things really tight, or if you're a shorter term trader. But that's kind of what I would look at in terms of overall perspective here. Essentially, you've got this multi-time frame uptrend still in place for the S&P 500. You're trading at all-time highs. You had a little bit of volatility. It was bought up again, and so life goes on marching to the upside. So that's kind of the outlook there for the S&P 500. The Russell 2000, again, this was in a little bit more of a just a small, minor kind of pullback sideways range here into the end of the year and starting the new year. You can see we had this kind of 5-6 day consolidation to a slight pullback. We launched higher off of this really Wednesday with a 4% move to the upside, heavy volume coming in, and that really sort of set the tone for the market for the rest of the week. We traded up Thursday. We traded ultimately sideways here, slightly down on Friday, but you can see certainly just basically the stone's throw away from all-time highs. So the Russell 2000 levels are a little bit more clear here. I think 191 in change. This is essentially the lows from Monday of this week. It's where we kind of, traded around here late in 2020. And so if we started to lose the 191 area, that would be sort of a short-term concern, or at least a change of behavior for the market. If you wanted, again, to keep things much tighter, you could use this 201 area. It's essentially where we topped out on the highs here of Monday, the 28th of December. And so if we started to lose these prior highs here, then again, if you're shorter term and active, you might want to pay attention to it. So that's really the Russell 2000 outlook. And if we look at the Nasdaq 100, you can see this is kind of, it took until today on Friday to actually start to break out to new highs here. Now, a couple of things that's interesting. So one, our level that we could pay attention to is really Friday's lows, 315. So if we, rejected essentially the trading from Friday very quickly here next week, that would be a bit of a concern if we started to just reverse and fall back below 315. So let's keep an eye on that. The other thing that's notable down here is just the volume. So take a look at, all these big abrupt sort of sell sessions that have been coming on, call it 150% volume. This has been a bit of a pattern here as, the past month or so of trading. The highest volume days, the 5 highest volume days, 5 highest volume days have all been to the downside on sell sessions. And, to the market's credit, there's been no follow through. It's just rallied right back up. So you do want to respect that. But there have been these knee jerk days where the market likes to, really pull the rug. And sooner or later, we're going to have some follow through to that. So let's pay attention to this one. I think the cues might give us, maybe even some early signals here. Does look like it's, again, if I had to, really read between the lines, is probably the cues here that would be the thinnest in terms of looking for that reversal. If you're really trying to play for that counter trend move or some type of top for the market, I'd be paying attention to the cues here below 315. Watch the volume. That might be your clue. So that's kind of the breakdown there for the market. Again, taking it one day at a time, respecting the uptrends that are still in place. And again, we're closing at all-time highs in all of these markets. So that's kind of the landscape there. Let's take a look at some of our other markets here because we had some interesting moves. So if we go to our credit screen here, we did mention the LQD move here that occurred, and that is something that, again, I think we want to pay attention to. Most of that selling came on Wednesday for this market. You can see our smart trend filter turned bearish on Wednesday. So again, I think we want to keep an eye on the credit market there. And in terms of VIX, so down bottom left, I had to change this over to the VXX, which is certainly not ideal. The volume for TC2000 on the spot VIX is causing some issues here. So VXX is what we're looking at here. I don't really have too much else to say about it, though. TLT is what some of the big story is to this week. And so again, if we look at the weekly time frame for TLT, you might, you could very well argue that the 4% down move that we saw this week in TLT shouldn't have been a surprise, because if we looked at the longer term trend, it has been bearish down negative since October of 2020. So really, you're just getting a move in the direction of the primary trend. But on the daily chart, which we look at a lot as well to catch the more intermediate to shorter term swings, this has been a little more kind of all over the place. It's been mostly down, but there's been some hints of TLT trying to turn back up. We talked about that compression. It broke down. We'll talk about that more in just a second here when we look at the candlestick charts. And if we look at commodities, though, before we go to some more price action, we look at commodities here on the weekly time frame. You can see GLD is starting to reject now from a pretty important spot. So you can see our trend filter sitting up around 177. It basically got right up to it, and then it's starting to roll over. Silver got above this trend filter, but notice it hasn't quite turned up yet, and it's right back into it. So that means it's definitely not going to do it, this coming week either. So let's pay attention to both of these markets. I think gold, certainly seeing the, the big drop here. I mean, both markets, frankly, but seeing, the slice right below more convincingly the daily trend filter. And so that's reasonably going to potentially turn this back to bearish if it can't get back up there above it early next week. USO is still in an uptrend. DBC still in an uptrend. So let's take a look at gold and silver to start. So here's what we were looking at. This is roughly the artboard we've been drawing on. We had, first we had this little 2-bar island top up here that caused or ended up being the top and proceeded to fall 10%. We had this little 2-bar island bottom down here, and that's essentially what we've been rallying from, up around 10%. And now when we look here at the price action, so we were starting to get excited that we were finally lifting over all of this consolidation in here, and now here we have it on Friday, where we've got a heavy volume drop back below this heavy, sideways consolidation, heavy supply area. So for gold, kind of the interpretation here is, look, the daily chart, as we just looked at from our trend filter, is still, it's neutral right now. It's been positive here on the daily, and it just turned neutral. So right now, it's kind of the bull's last stand to try and support this market, to try and stabilize us quickly and preserve this trend. The weekly chart, again, we looked at, and this is neutral to negative. So you've got some cross currents here, and gold sits at now a very tough spot. If it gets follow through, if it starts to settle in back into the lower 170s, then, it starts to look dicey again, that this could start to roll over and, retest perhaps these December lows. So I think, going forward here, we're going to see if there's any follow through selling on Monday. Maybe this was a one-day climactic move here. We washed out a lot of, maybe the momentum traders that were getting excited in here. And if we can put in a higher low, then, things might look good here heading, through January. But if we start to get follow through below and holding into the 170s, you got to be cautious. Same thing with silver. I mean, silver has been positioned slightly better here from a technical perspective. It still certainly had some technical damage. It broke this, the slope at which it's been trending higher here. So again, let's pay attention to follow through. If we get more, selling into the 22s or so, and if we start to lose the 22s, then you just risk coming right back to the bottom end of this range that we dealt with back in December. So that's kind of the read there on metals, both in a tough spot. They do have the benefit of the doubt that they've been working higher, but the buyers are going to have to prove it early next week. If we look at TLT, which again, this is the chart we were talking about. We mentioned on multiple occasions the early 2021 would likely be when we'd see that expansion. And we got it. We saw it here in the first week of 2021. Expansion came to the downside. We didn't know what direction this was ultimately going to break. All we knew, that price was exceptionally tight in here, trading in between 155 and 158. So right now, I think you got to be careful here. You got to be either a seller, you got to be on the sidelines. It's possible that this is climactic and this could turn into some false breakdown. And if that's the case, then we'll see it soon enough, because price is going to have to get back above 155 quickly. If it does that, then yeah, we might have a good bottom here to trade against for a more longer term trade. But right now, that's not the path of least resistance. I don't think that's the high probability outcome. So I think you have to be cautious here with all this supply, with a recent break of support, heavy volume. You got to be careful here. You got to be looking at lower prices for TLT. We'll see, of course, how that plays out. We know the Fed has been involved in these markets, certainly involved in all markets at this point. So I think we joke, but it is very serious that the Fed put is a thing. And I don't know how happy they will be seeing rates totally let loose to the upside. So be an interesting one on how it develops. But from a price action perspective, there's nothing to like here from this week. So that's TLT, that's gold, that's silver. I did want to mention the dollar, UUP. So this is not the best proxy, but it's just the dollar index. Take a look at the volume coming in today. I think that's interesting. I mean, it's not super high, but it's definitely the highest we've seen in the past month. And it is coming on an up day. It's coming on a day where there's, been some positive kind of MACD momentum divergence going on as this hits new lows. It's been struggling to make more broader lows on this move down. So it does seem like it wants to counter trend move, and that will impact virtually all markets, because everything is pretty much tied to the dollar at this time. So I think that's also a pretty important call out going forward as a warning sign to potentially watch. So in terms of sectors, everything basically worked this week. Semiconductors really hasn't let up at all, and that just continues to be the case here. We just see this endless trend to the upside, so there's been a lot of strength and leadership in semiconductors. That's just continuing. We got XLB here, which is materials. This is interesting because this did resolve this pretty tight trading range in here. So this essentially went nowhere for December, and then as soon as the new year hit, we were off to the races. We saw heavy volume coming in. We got the breakout. We're trading at highs. So materials, new actionable sort of breakout here in motion, and that's a new sort of trade. Financials also working very well since the start of the year. I think we did get back, let's see, did we get back to all-time highs? We got very close to making new all-time highs, nearly there. We did fill the gap here back from February. of 2020. So we filled the gap. We're nearly back at those all-time highs, and this is just continuing to sort of stretch to the upside. In terms of things going sideways, I mean, XLP not really doing a whole lot this week, or really this past month. It's still kind of moving sideways here. We do still have a position in XLP, believe it or not. We've had this for a while, but we still are hanging out with a partial position, at least at this point. So again, it's holding up. It's trading just under its highs. It's not doing a whole lot. So again, it's in volatility contraction mode. So certainly worth paying attention to. XLI also didn't really get the breakout this week. It's very tight, and you can see a lot of volume came in. It traded right back up to these highs. This is still pretty actionable. So XLI, let's keep this on the list here. Didn't break out with a lot of the other markets, but it's right at the top end of the range. So expect this to either, go for it early next week, or we're going to see some type of failure, and that could lead to a swift move down. So we'll pay attention to it. And that's it. That's, I think, everything I have from my notes from this week. As always, I'd love to know what you guys thought were important this week. What did you see out there? What caught your attention? What are you paying attention to heading into next week? I'd love to hear what you're looking at in the comments below. So leave a comment. And without any further, go and enjoy your weekend. Have a great weekend. Thanks as always for tuning in and watching. If you like the videos, you can subscribe to our YouTube channel or follow us at The Trade Risk. Have a good weekend, and we'll see you next week in a new video.